Good morning, everyone. It is the morning of April 22nd, dreary Wednesday morning here in Dallas. For those of you that don't know, my name is David Mott. I'm a financial advisor here at Nexus One. Here for another market recap, give you some ammo for the water cooler, let you know what our investment committee's thinking, what some data points that have come out here recently, and what our overall take on what is going on, all things finance related. S&P 500 had a pretty good week, ended up positive. The last 5 days up just under 1.5%, bringing the year-to-date total at just over 3%. So a lot going on in the market, some data points coming out, very much earnings heavy week, a little light on the economic side, and of course, the conflict in the Middle East. Let's break it all down for you and get you up to speed on what we're thinking. So the market always boils down to earnings, and it's a heavy earnings week. And we have some pretty good news. Everything is beating earnings to meeting expectations. Some big news, Elevance, a healthcare company, healthcare still going strong, beat its earnings based on analyst estimates, as well as 3M. That's a good bellwether for the industrial sector. 3M earnings beating expectations. Capital One, United Airlines, both had very respectable numbers, a number of key matrices. Given their industry, some credit pinches, and the global issues with air travel for the foreseeable future, Wall Street responded with a bit of a mixed bag. But so far, when it comes to the earnings side, pretty good this week. Economics a little light. We talked about the PPI last week. View that as business inflation, right? The CPI is what it costs you to buy stuff. PPI is what it costs a business to buy stuff. Those numbers came in softer than expected, still floating a little elevated at 3.5% to 4%, but under what the market had baked in. So that's actually good news for the economy. This pinch in oil hasn't trickled in too terribly to that PPI number just yet. Coming up, two big items. We have the University of Michigan consumer poll. This is one we take with a grain of salt. Again, University of Michigan is a great institution, some great minds behind that data, but consumers are fickle, very emotional, tends to always be a little downtrodden in terms of the consumer sentiment. Our group likes to look at more the investor sentiment, uses a little bit more hard data, harder to find, but we feel that's more of an accurate poll. But the University of Michigan consumer sentiment will be coming out. Again, this is Friday. If it comes out a little downtrodden, which we're expecting, market may respond very, very softly to it. Again, you got to take that one with a grain of salt. Coming up, though, in a week from now, big meeting, Fed gives its decision. Fed giving its decision. Jerome Powell will hop up on that podium, very likely with a purple tie, and give his thoughts on the state of the economy and what the rates hold for us in the near future. The overwhelming expectation when it comes to that Fed rate is a hold fast. Stay the course, not an increase, not a decrease. Very much the expectation is to hold. In the event all odds are wrong and the Fed does move, whether it's positive or negative, that could have a bit of a pullback in the market. If we increase rates, of course, for obvious reasons, which we know all too well from recent years, the market will respond negatively. Even if there's talk of a pullback here very soon, we could see a little bit of a scurrying and stumbling of the feet, because Wall Street could very likely, and often has in the past, say, what does the Fed know that we're missing? Why is it lowering interest rates to stay ahead of what potential crisis? That only is if the odds are beat and the Fed does make a decision, but the overwhelming odds are, and we do believe, the Fed will hold interest rates as they are for the meeting next week. In that vein, a little bit of geopolitical news. Warsh, the Fed chair apparent after Powell, is set to sunset here May 15th, had his confirmation hearing. Again, very geopolitical, got somewhat petty. We wish they would have spent more time asking questions about the Fed independence. They grazed it, but overwhelmingly, he is seen as the heir apparent for taking over Jerome Powell. There is a wrinkle. Currently, there is an investigation, an ongoing investigation into Jerome Powell. Members of the committee have alluded that they are not thrilled with letting him end his tenure while that investigation is still ongoing. As of now, the executive branch in Washington has not indicated that they will be dropping that investigation. So while we are confident that Kevin Warsh will be the new Fed chair. It becomes a question of when. Should not rattle the markets too much in the event that Warsh's new reign is delayed. It is very much a stay the course. Albeit, though, market is responding somewhat positively to Warsh, given his, in a sentence, hawkish approach to the interest rates. Of course, here we love that hawkish approach on interest rates. That could be some cuts, and we could get those 2 quarter-point rate cuts baked in. So if we get a hawk that likes to slash rates, we could see some positive responses from the markets as a whole. Some fun water cooler news for you. Apple is making a change. There will be a new CFO. Tim Cook's 15-year reign will come to an end here in September. So not immediate. Apple is looking to have John Turnus, former engineer background, very much heavily on the hardware side of Apple for numerous years, take over reins. On the tech side, this is actually very exciting because it's Apple making a move to try to increase their play in the AI market and AI delivery market. So with that, we like to see the big guys in tech join the fray when it comes to AI. Apple a little bit late to the party, but again, with that empire, them joining could be great things on the tech side and a little bit of momentum later in the year. And so right now, there's a little bit of validation with good old cryptocurrency, making them a little bit more respectable through New York State litigation. New York State has filed suit against Coinbase, one of the largest crypto platforms and promoters, deeming that it is allowing individuals under the age of 21 to gamble, which is illegal according to New York State law. What this means is that the Wild West that is crypto is starting to get a little bit more regulation, a little bit more rules. I get that a lot of folks don't like regulation and government sticking their nose in, but when it comes to the validity and the reassurances in the financial instrument world, this could actually be a good thing to make crypto take a step in the right direction to be a little bit more respected amongst financial instruments. They have a long way to go, but the Wild West is coming to an end when it comes to crypto, albeit some very baby steps. And of course, the situation with Iran remains volatile, remains fluid. As of last night, the ceasefire has been extended. Iran did respond with sending a few missiles to a container ship, and the blockade is still in full force, pinching currency going into Iran pretty heavily if those ships are not able to move in and out of that country. But Wall Street is responding very positively to that extension of the ceasefire. Hope the good news continues and things calm down. Got to hand it to Wall Street a little bit when these geopolitical turmoil situations go in. Retail investors tend to be very forward-looking, make all sorts of connecting of the dots they shouldn't. Wall Street has a very short leash and reads the market as it is, which is largely justifying these growth that we've had here recently by looking at earnings, looking at processing demand on the AI side, a number of these strong points. Again, we're very much watching how this pension oil will trickle down into the inflationary markets and also when. So it's a question of how deep and how much will it rattle the cost of consumer goods globally and when. It's a bit of a delayed effect, a bit of a trickle down effect. So far, with the price per barrel being kept somewhat relatively $100 a barrel or below within range, given what's going on with the conflict in the Middle East, Wall Street remains optimistic, but very cautious and reading the market as it is today, not being too forward looking when it comes to these geopolitical items. Things we're watching on our investment committee. If you have questions on how far away we are from any of our particular defensive postures, do not hesitate to call your advisor or myself direct. We're a chatty bunch, always happy to deep dive on anything we talked about. A lot going on in the world. Hopefully you have a little bit better idea, clearer picture of what is going on. Again, we'll see you next week. We'll keep you posted. And if you have any questions at all, please reach out. Hope you have a great week.